Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. And if you're new here, every Saturday we start off the weekend right by breaking down the latest news and the hottest topics in the world of technology and cryptocurrency whilst drinking a cup of delicious coffee. That being said, in today's episode, we've got some DeFi investing, Elrond, Cardano, our usual 404 Logic Not Found segment, and more, so make sure you stick around for all the updates to come in this video. But as we always do, let's kick off today's episode with questions from you, the awesome folks who watch my channel. And if you want one of your questions answered in the future, make sure you leave them down in the comments below, tweet me at Hashoshi4, or leave them in the official Hashoshi Discord channel. Oh, and if you would be so inclined, please do hit the subscribe button or the follow button on whatever platform that you're on. Hit the bell notification button so you know whenever I post, and that's much appreciated in advance. So let's go ahead and dive into this first question. Now, the first question of the day is from Rex Witten III. How can a novice, such as me, become a blockchain developer? And this is a question that I get all the time from folks that are watching the channel, so I think it's a perfect one to answer. Now, I think it depends what background you come from. If you're already in tech or you already have programming skills, the path to becoming a blockchain developer is a lot different than if you maybe are in a different industry vertical, you don't have programming experience or you don't have tech experience. So if you do have programming experience and you come from tech, the thing that you really need to be doing is just getting practice. So you can first get started learning a language like Solidity, which is arguably the most popular language, although difficult to master. You can start it on cryptozombies.io, and I'll put that link down in the description below as well. You can learn the ins and outs of Solidity there, and then I would just, the same way you learn any other programming language is you go in and you build things that you can think of, and you just continue to hone your skills by learning from others online, and there's tons of great content out there as well. There are also platforms like Elrond where you can use traditional languages that are compatible with WebAssembly in order to pretty much use a lot of web dev skills or backend dev skills to build smart contracts that are compatible on the blockchain. So look out for all the opportunities that there are out there in that regard. If you're not in tech, start with learning programming. I would say pick either JavaScript or Python and learn those things from scratch. There's a bunch of good places, Codecademy, Treehouse, tons of places to learn to program from scratch. Once you have that fundamental knowledge, then follow these steps that I laid out for people who already know how to program. So hopefully that's a good primer for you if you want to become a blockchain developer. The key is to learn and tinker and understand the core tenets of blockchain and how applications differ from those that are built with non-decentralized tech. So thanks for your question. Second question is from Yael Martinez. I have a question for you. It seems so far that Bitcoin has a relationship with the movements on traditional markets. Why is it said that Bitcoin is a hedge versus inflation if when traditional markets fall, Bitcoin does as well? I have a vague response, but I'd love to hear a real one. So this is another really interesting question that I think is fairly hotly debated and contested out in the markets abroad and in the media especially. Sorry guys, my voice is really shredded right now, so I'm trying my best. The reality is that Bitcoin's relationship to the traditional markets is undeniable, but its relationship to inflation, I think, is a little bit different. Traditionally, like we saw in the Black Swan event, for example, in March of 2020, the stock market took a massive nosedive. Almost every asset class took a nosedive, and Bitcoin followed with it. Although Bitcoin's sort of return or its rebound was a different curve than the traditional markets. So there's some deviation there. And the correlation levels vary throughout the year, I would say. But in terms of inflation, inflation is something that is almost totally separate. And inflation really changes, obviously, depending on where you live, right? How much of your local fiat currency can one Bitcoin buy? And I think when you think about gold being similar, right? A lot of people say, oh, well, my investment in gold over time has grown in value. The reality is that your gold itself hasn't really grown in value. That 1 ounce of gold that you have just buys you more dollars or Great British pounds or euros because those currencies have been inflated. They have less spending power. And so Bitcoin is a hedge against inflation because largely, if you look at the trend line, it's protecting your spending power and increasing your spending power in some cases over time. If you look at the net trend, if you look at a certain moment in time, say in 2018, when you bought in 2017, your spending power obviously decreased. But if you look at it as a hedge against inflation, in fact, I think that it is. But of course, everyone has a different opinion on that. And so I look at Bitcoin like digital gold in many ways. It's a great way to maintain and stabilize and protect your spending power relative to whatever fiat currency that you have. So thanks very much for your question. And of course, watch these stats over time, and I think you'll see the trend. Next question is from Diego. Great content as always. Thank you so much, Diego. Let us know what you're thinking about Avalanche and its tech. Now, Avalanche is another interesting project in and of itself because in many ways, Avalanche has taken some of the best pieces, bits and pieces of a lot of different protocols that are out there. It's almost directly challenging Ethereum at what Ethereum really does best right now, and that is DeFi. And so Avalanche is really just this tailor-made platform to do all the things that your favorite blockchain can do, but to really be a nest for DeFi projects. You get fast transactions, you get the normal 51% protection and the normal transaction finality and all that good stuff. And I think Avalanche has a ton of potential. The reality is, though, this is a really, really difficult space to win in because there are so many different protocols, layer 1 protocols and layer 2 included, that are gunning for this sort of same market share. And so Avalanche is going to have a tough path going forward, trying to grab market share and get users on board and get DeFi dApps to build within the context of their platform. So that's just something to be aware of. But I am a fan of Avalanche. I think it's going to be really interesting to follow. And if you would be interested, maybe I can do a little bit of a tech deep dive on Avalanche itself. So thank you very much for your question, Diego. Now with that, I think we're going to go ahead and dive into the news section. So let's go ahead and do that. Now, I just want to give you a friendly reminder. Please be aware of scammers that are in the comments posing as me. Every week, it seems like there are more of them, and I cannot keep up. If the comment that you see says Hashoshi, but it doesn't have the name highlighted, it is not me, and you can go ahead and report them or let me know, and I will get rid of them. Also, for those of you who are new here, every week in partnership with the folks at Cobo, they make the awesome Cobo Vault wallet, I'll be giving away a Cobo Tablet steel seed phrase backup in every episode from here on out. It's a little steel plate device. Now, all you have to do to enter the random draw is to comment on the video. That's all you got to do. And I will pick a winner each week. And just for transparency, the product is only available in select regions. So if you win and you're from an unsupported region, I'm just going to go ahead and send you Bitcoin instead, which is also a pretty good prize. Now, the winner of last week's giveaway for the Cobo is here on the screen. So a big congratulations to you. And of course, I will be in touch. To kick off the news today, everyone always loves to hear about Bitcoin and some Bitcoin price analysis, as we usually do in these videos. So the week started off at the same sort of low 30K trend that we've been seeing after the past couple weeks of volatility and dips as far as into the upper 20K range at times over the last several weeks. That being said, I think Ethereum's big move upward, we broke a new all-time high for Ethereum, along with continued ravenous institutional buying from the likes of Grayscale Capital, who are scooping up well more than the daily mine supply of Bitcoin every single day. I think those things helped push Bitcoin higher towards the week's end, leaving us in the upper 30K range, with 38K being the average resting place in US dollars at the time of recording. Now, it's one thing to talk about Bitcoin now and where the price is now, or in hindsight, but the bigger question is, where is it going from here? And the reality is that there are both bullish and bearish cases ahead of us, and lots of things will hinge on institutional buying, miners selling and in what quantity, and altcoins and whether or not they continue to pop off like they have been. Usually I've found that when altcoins go way up for a series of weeks, a handful of weeks, people start to take profits and move to bigger staple coins like Bitcoin and Ether. And I realize that's a confusing way to say it. Staples as in commonplace blue chip coins, which often end up driving up prices for these cryptocurrencies like Bitcoin and Ether. When you pair the Bitcoin supply shortage with buyers, both retail and institutional, looking to jump in, that's a recipe for price movement in the positive direction. Bullish cases like this have targets of previous all-time highs in the mid 40K range. And also on the flip side, you can think about bearish cases that could lead to more time languishing in the low 30Ks. But to be honest with you guys, it's $30,000 Bitcoin, something that we would have been very happy about in 2018. So really nothing to be sad about. Now, speaking of crypto and crypto investing, I've been using this investing app now for about a year, and I'm now confident that you might like it as well. And I think now I'm confident recommending it because I've used it so much. The app is called Donut, and it is an investing app that allows you to deposit fiat currency and earn rates of return ranging from 4 or 5% upwards of 14%, leveraging the wonderful world of DeFi. Now, by the way, I'm not sponsored by Donut. I'm just a fan and an everyday user, if you will. Essentially, Donut acts almost like an investment manager, abstracting away all the day-to-day trading and transactional activity that you'd make if you were investing in the DeFi space on your own. And it lets you set up your own account, select your investment option, and you're done. It's pretty much that simple. So currently I've had my money largely set to the middle tier DeFi investing option. I've been earning 8 to 10% on my investment consistently, which again makes my high yield savings account look like a complete joke. Now, this 8 to 10% is largely dependent on compound finance, the DeFi interest earning protocol that is in the world of Ethereum. Now, one could manually set up and invest in and earn yield from compound and other DeFi protocols on their own, but Donut provides exposure to these hot markets in a super simple way. In particular, for me, it's a great way to consistently have skin in the game within DeFi and to be invested in the DeFi world without having to manage it day to day. I've got too much stuff going on. Will this replace all my DeFi festivities that I do manually? Not a chance. But what it does allow me to do is to have a recurring fiat investment into the crypto space that I don't have to worry about and I don't have to focus on managing day to day. So Donut's going to be adding new fund options that use different DeFi protocols to earn and hopefully earn even more in terms of yield. So make sure to check them out if you're interested. Their iOS app is fantastic, and I think they have an Android version as well. So I'll leave a link down below in the description if you are interested. Now, we talked a lot about DeFi in that last section, which is a great lead into my next story about Kraken, the popular crypto exchange who release these absolutely fantastic research reports about crypto topics fairly often. And the latest such report is about DeFi, or decentralized finance, and its meteoric rise to popularity. What fascinates me most about this report is that it gives facts and figures that really give us an idea of how big DeFi is. I mean, only a matter of months ago, I remember sitting on Crypto Over Coffee telling you and celebrating $1 billion mark for in total investment locked in DeFi. And now we're at an estimated $11 billion in DeFi lending alone. And that continues to grow along with the whole DeFi space, which I don't even know if I can quantify. This space is exploding. And this report also dives into metrics like exploits of smart contracts in DeFi, reporting that 86 million is estimated to have been taken from DeFi contract exploits in 2020, which also casts sort of a stark picture of the risk profile for DeFi investors that don't exercise caution and good risk management when entering DeFi protocols. However, the overarching theme of the research is that despite the risks apparent in the DeFi world and the growing pains, the opportunity is nearly endless right now, and we're just getting started. So I'll leave a link to this report down below so you can read it in more depth if you're interested. But to be honest with you, if you don't even use Kraken as an exchange, this Kraken reports section here is fantastic and you should definitely subscribe. Now, I want to turn attention now to Elrond, the scalable Layer 1 blockchain protocol that is making a major splash on the social media world after their successful mainnet launch last year and the official release of their amazing wallet and mobile app, Maiar. Now, I've been using Maiar, this amazing application, for a little while now since it came out, and man, it is such a well-designed application, and it will surely onboard a whole lot of people to the Elrond ecosystem to stake inside the app, to send eGold, the native cryptocurrency, to their friends, and etc. Seriously, it's one of the best wallets that I've used in a while native to a protocol. So this is super well done, and it was worth the hype. However, there is more that I want to discuss in regard to Elrond, and that is the recent announcement of collaboration and integration with a new Oracle provider on the block, Razor Network. Now, I've been following Razor Network for a little while now, and it's been on my radar, but it's starting to pick up steam as another Oracle player to compete with in terms of API 3, Band, Chainlink, Teller, etc., all the big players. More competition is on the way, and I like the way that they're approaching the Oracle problem overall. Now, Elrond integrating Razor Network oracles is a major signal of support for this up-and-coming project in the Oracle space. And of course, on the other side, the more oracles that are providing Elrond smart contracts with data and high-quality data, this is good. So I think it's really smart for Elrond and really good for Razor Network to be collaborating on this. There should not be an Oracle monopoly on any network because that's counterproductive. So big news for Razor Network and for Elrond. And fans of Cardano will also be very pleased with this week's news, as IOHK and those behind the protocol's core dev outlined the new Mary hard fork intended to bring native multi-asset and multi-token support to the Cardano mainnet. But there was also a little bit of, I guess you could say, tidbits about other exciting announcements, like the latest version of Ouroboros proof of stake consensus, the mechanism that really runs the heart of the Cardano network. This is news about the latest iteration of Ouroboros, dubbed Omega, which brings together sort of the study of governance and macro level decentralized network research that IOHK has performed to create this compelling storyline for what's to come in Cardano as this new consensus mechanism iteration is released. Now, what this all really means is that the ultimate goal of smart contract support on Cardano by way of the Goguen update will be coming in the first half of 2021, and I remain confident in that. It might even fall within the first quarter of 2021 if all goes well. What is most important now is that the Mary update that we spoke about just a minute ago does in fact go live on mainnet at the end of February. It's in testnet now, and so hopefully if it goes live at the end of February, everything's on track for Goguen, and that will set the sort of foundational multi-token ecosystem that Goguen needs. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I'll highlight notable tech-related fails or otherwise stupid moves or stupid words in the world that need to get some attention. And speaking of attention, if you want to help this video or this podcast get some attention from the algorithm, please do hit the like button, hit subscribe, start following, because it tells the robots that run this whole show that you're enjoying the content. So thank you so much for that in advance. Now, this week, I want to talk about this growing trend that I'm seeing in the media these days about going feeless. And in the blockchain space, going feeless basically means making transactions and usage of dApps completely free of fees in order to lower the barriers of adoption for a blockchain. That's the idea. They say fees are too high. Fees in general make people not want to use it, makes it unfeasible to use. And this is just about the perfect example of how many people opine about this technology, but really lack knowledge about the mechanics behind a solid public blockchain. Let me make this abundantly clear. The high fees that we see on Ethereum and Bitcoin to an extent at high volume is not normal. It can't work, and that much is evident. But to go without fees altogether presents a whole new challenge, and that is security. Fees are an important aspect of the intricate economy that provides incentives for participants of the network to do the right thing, for block makers to do their job and to execute logic on the network too in some cases. Fees are critical to the blockchain operating as a decentralized network like it's supposed to. So to willy-nilly call for fees to be abolished is foolish at best. The truth is, fees will likely be an everyday part of blockchain protocols forever, unless something dramatically changes in both tech and human behavior. In Bitcoin, for example, transaction fees are critical components of the security model in tandem with proof of work, because it provides extra layers of incentive for miners, and it also makes flood attacks way too costly to do. Without any fees in Bitcoin, there's little to stop a bad actor from effectively denial of service attacking the network by flooding it with transactions and blocking out legitimate ones. This is but one example, albeit a compelling one, of why fees are critical, and to call for fees to be abolished or to be removed and that we need a feeless future really just presents 404 Logic Not Found. Now, I do also want to shout out a pretty cool Ethereum-focused project that's doing something that I think is pretty useful for smart contract developers and, to be honest with you, users also. And this is a project that I think if you're in the Polkadot ecosystem or Elrond or Cardano, etc., maybe you should copy this idea. The project is called Gelato, and their goal is to provide a decentralized network on which automation can be performed for interactions with smart contracts. For DeFi, this is particularly important or powerful because with a decentralized network, you shouldn't use a centralized automation tool to perform tasks like clearing liquidity pools or monitoring transactions, because you now have a centralized attack vector that if it were to go rogue or fail, you've kind of defeated the purpose of a decentralized network for finance. Gelato is building a fault-tolerant and decentralized network whose sole purpose is to trigger and facilitate automated interactions with smart contracts. The idea here has broad applicability. For example, in combination with Chainlink, in order to automatically trigger DeFi trades or transactions up until the gas price oracle from Chainlink hits a threshold where it's too expensive for your budget to trade. So you would basically automate trading with actual protection against gas price fluctuations, where using an oracle, the automation program knows, let's stop trading, it's costing too much. So this is cool. The possibilities are endless here, and I will be adding Gelato to my own personal toolkit, along with things like the Graph and others that are solving for major gaps in the current developer tooling space in Ethereum. So I really think that Gelato, amongst others, are really doing a good job of providing useful tools to make really useful dApps even more useful and to create brand new things we haven't seen before. Now, folks, that's going to do it for Crypto Over Coffee this week. I want to thank you so much for watching this and every other episode. And if you're here from BitBoy's channel or any of the other collaborations I've done, thanks so much for being here. I really, really do appreciate it. And hopefully it's well worth the visit whenever you come and check out good old Hashoshi's channel. So I wish you and your family a wonderful and restful weekend. And until next time, cheers.